All right, team. Good evening, everybody. Welcome to our weekly recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. It is Sunday, September 22nd, 2024. Glad to be with you. Hope everyone's having a nice evening. Let's go ahead and get started. It's back to work. We had a great week last week. Let's go ahead and recap it. We'll preview the week as well and talk a little macro. So let's go ahead and get started. If you haven't already, make sure to hit that subscribe button. If you like this content, make sure to hit notifications so you don't miss any future notifications and future content that we'll provide. This is also going to be posted on our podcast on Spotify and Apple Podcasts, kind of a simulcast of the weekly recap if you're someone who's just going to listen to this in your car or with your headphones. With that being said, let's go ahead and get started. Futures are open currently, up 16 points on the Dow, 35 points on the NASDAQ, S&P, relatively flat-ish, 0.08%, and then Russell is up 0.34%. So that's what we got so far this evening. Pretty quiet, to say the least. The past week, let's look at it. 5 for 5. Great way to bounce back. We got a new streak going. Google calls, 165 calls, 115%. Tesla, 245 calls, hit as high as 75%. We got 40% on that. The Apple calls, I'm going to show you guys rather quickly because we filled that. I believe that was on Friday. On Friday, yeah, Friday the 20th. Yep, we filled those 235 calls. Friday at 12:27 p.m. Excuse me. We also filled Amazon as well, and we were holding Palantir for a minute, and I said to close there. I gave everyone the heads up. The Apple calls, the 235 calls for September 27th. Again, these were all expiring next week, not this week, so there wasn't really much a sense of urgency to get out of them. So we really broke it down this way. If you're watching, you go to our watches and charts. This is all for our paid members. And we put the chart for Apple. Trendline breakout on the daily. Take a look here. We were trading at that point at 231.50. When we got in, the stock was up 1.15%. We had a target of above 233.13. If that broke, we were looking for all-time highs. But 233.13 is just retest that top end here of this trend line where the trend line actually began. We had a trend line breakout. We also had a gap. Again, next stop is all-time high if we can break above 237.23. Let's see if we get in the money. This is what I wrote. So what we got to 233.09 right around, was that 3 p.m. Eastern Standard Time, pretty much right at the power hour. And then we had your back. We're giving you guys the heads up right at 335, 30%. Take the snack and close here. Again, I was thinking of you guys for just taking your profits ahead of the weekend. And you could see here, right when things started to go south, was right at, what's this price here? It's around 3:45 Eastern Standard Time. We hit the wick high right at 340. This is all live right at 335. That's when we got out. So 340 is when we got the peak. 335 is when we sent out the close signal. And the reason I say that and why I'm so proud of it is because right after that, we pretty much tanked rather quickly. So if we look at Apple, again, we already took the profits. Excellent work, everybody. It's still a bullish trend. It's not like it's bearish or anything. But again, just happy that everyone caught it. This is not the best daily candle. So again, there's something that I'm watching here is that we possibly may fill this downside gap. But the last time I said we would get this kind of shooting star candle was in the S&P, and we continued higher. So candlestick patterns aren't always perfect. But let's see if we get continued weakness on Apple. It's something to look forward to. 222.82. If we get there, that is the gap fill. We can play a bounce off that 50 MA for continued upside, which I think would probably be best. So the best bet would be to wait for this gap to fill, because if we play below 225, it's going to be tough sledding to catch it. If we can, that's fine. So I'll place another alert here at 224.55. We'll see the volume there. I haven't seen a lot of put volume lately. Again, if you guys remember from the podcasts, I was trying to short Bitcoin. Good thing we didn't, obviously. So the volume wasn't there, which kind of helped us out. But we'll see if we get any kind of volume on Apple puts. If we break below the 225 level, then we could play that gap fill. It kind of gives us some flexibility. I'm thinking more kind of playing the bounce off the 50-day, which is right around 222. Let's see if Apple pulls back and gives us an opportunity to play either the bounce or the gap fill. That's really just dependent on that, on what the price action dictates. So again, great work on that. I'm just very proud that we got that. There's just sometimes, guys, you just take the money. It's a Friday, just take the money and run. It was an OPEX day. Amazon, we got for 30%. Excellent work. Anthony got it for 35. Palantir, we were holding for a while. Again, I still like Palantir for more upside. My thing was just to have everyone make money. Just get money. We don't have any things to worry about. We move on. But there's still more upside room on Palantir. So I'm going to keep an eye if we break above 37.42. The only thing that has concerned me with Palantir is the fact that we may be overbought, which we are very overbought actually on the daily. We could always be more overbought. Obviously, we can probably get to that 80. And you can see the last time that we got there, we pulled back a little bit. So keeping an eye on Palantir. If 37.42 breaks, we can see what we can get for continued upside. I'm assuming that the 40 calls will probably get the most demand. So keep an eye around that 40 area. That seems to be that round number figure in the options world where Palantir may get some targets there. It is overbought. So I'm kind of glad that we got out for minus 10% for plus 10% on the option signal side because everyone takes their money. There's no risk open. We don't have anything open in terms of signals. That's kind of how I want to feel during the weekend. I don't want to have any worries. I just want to, get ready for the next week, so to speak. We're going to go ahead and close this out. All right. All right. So that was Palantir. So again, 5 for 5 Tesla calls. That one was a freebie, I believe. Let's take a look at Tesla right quick. Take a look daily. We were talking about that 235 level. I marked it in purple. We broke above. We were looking for that 245 gap fill. We did not get it as of yet. So it's still kind of a waiting pattern for Tesla, even though we still got it. But again, there is the other gap fill at 289.50. So there's probably more upside for Tesla. Let's see what we get. You can see a nice cup, nice handle. We're probably adding more upside on Tesla. So let's see if we break 245.24. If it does, we can take a look at around the 260 to 265 area just to retest this resistance here that we've had really much since the beginning of 2024. So Tesla giving us some action for more upside. Okay, so that was the week. And again, if anyone is on the server, the trophy room is always available to take a look and see how well our members have done. I really don't post much on there because it's not about my trophies. My favorite trophies are your guys' trophies. That's my favorite because that's what I want to see. So again, great stuff. We want to keep it moving. We want to keep this streak going. September has been very tough for the market, but with that Fed cut, 50 basis points on Wednesday, that really gave a shot in the arm to the market. So let's go ahead and go over the past week and exactly what happened. We'll go bring up the S&P 500 spot. If you guys remember from the podcast, I was expecting a pullback, but we did not get one. We still continued higher, still very, very much alive for more upside for new all-time highs. The daily chart still an inverted hammer, so that's pretty good. No real gaps to fill to the downside. The question remains, do we just break out of all-time highs? And if we do, well, we're just going to have to go long. I can't really complain there, but just be wary, be ready for anything. October tends to be a bearish month, not to scare everybody, but again, we're looking for opportunities that if things do kind of pull back, which things can happen, we're ready to see for somewhat kind of levels. So if we take a look at S&P, there's one way to do it, which would be the rollover gap to right around 2642. It doesn't have to fill immediately. The last rollover gap that we had was on June 14th. That took about a month, I would say about 6 weeks to fill. Could that be the case for S&P? Sure, but rest assured that gap will be filled over time. It just does. So we'll see if we get added continuation on S&P. The goal is to really just break out of all-time highs. And if we do, we just ride the momentum. And if we see any kind of change really in the market in terms of a change of trend, then we'll be ready for that as well. But for right now, it just seems to be a slow melt up higher. So strong rally past FOMC. We got the bullish move pretty much everyone was waiting for. I thought we would get 25 basis points. We did not get that. We got 50. So that's great news that we have a very accommodative Federal Reserve. So here's kind of what stands out to me for the past week. Now that we got 50, we have an expectation of 25 in November and 25 in December. There's no meeting in October. So that's just a heads up. So we do have at least priced in another 50 basis points for more interest rates cuts. Again, this is a good thing, but usually it takes about a month or two for these rate cuts to permeate through the market, let's just say, or the economy. So we do have added upside, obviously. The question here, the issue here is the timing. And what can slip us up is the fact that if the labor market starts to weaken, that's where it's going to be an issue where we need more cuts. That's where the Fed is kind of looking at the market that, hey, that's the Fed put. Like, if we cannot have lower employment, we still need strong employment. And if anything happens, we're just going to keep cutting. And if that happens, so be it. But what we're looking for here is that who needs to play catch up? How many funds were bearish? How many funds were looking at market to be sold off, not to be higher? Make no mistake about it. It could have been a short squeeze that we had post FOMC. A short squeeze meaning those who were short when the stock market was moving higher because they were expecting it to go lower. Their stops were triggered, and what happens to those stops being triggered? They have to buy. Goes higher. So that's what happens. So we know that Fed rate cuts are bullish for the market. Again, it's all about timing. It's all about how long does it take for it to go through, and really taking a look at future rate cuts and what is it going to take to get there. Now, inversely, if the labor market is still strong, let's say it gets better, let's say we add more jobs, does the Fed pause on their rate cuts? Do they go slower? So that's kind of the push and pull effect. And we just have to go ahead and take it really week by week. So we have a couple of things that are coming up this week. Let's go over the calendar together. We have manufacturing services PMI, services and manufacturing PMI, excuse me. That'll be on Monday. So again, that's surveys. No biggie. Give me 1 second here. We also have consumer confidence on Tuesday. Seems to be kind of a survey-filled week. New home sales on Wednesday. Crude oil inventories on Wednesday as well. Durable goods orders, GDP, and Fed Chair Powell will speak again on Thursday. We also have core PCE numbers. That's inflation stuff. Inflation doesn't really matter right now because we're already getting rate cuts. So I'm not putting too much emphasis on the PCE, more on when Fed Chair Powell speaks, the GDP, and the new home sales. That's kind of what we're looking for. Well, really, the new home sales, that's going to change with lower interest rates. So we're going to keep that in our back pocket. I don't expect anything other than Fed Chair Powell speaking and the jobless claims to really affect the market in terms of headlines. So that's what we got. In terms of earnings, let's take a look at the earnings calendar. Really, Costco is the only one that stands out here. I've been talking about that for a minute. Let's take a look at the Costco chart. And again, still within the channel. It did hit a little bit of a peak here, like we talked about, 927.87, that zone. We pulled back, but we're bouncing off the 20. So it's really hit or miss because we're kind of right in that middle of the upward trend. We could get a breakout, we could get a pullback. So again, not a lot of edge in terms of trading Costco, at least for now. If there's anything that stands out in terms of volume, we will let you know, of course. So bring up the S&P again. So now we got to take a look at what are some of the stocks that need to catch up. What has the stocks that have been weak lately? Semiconductors have been taking a hit, if you guys remember. So let's take a look at AMD first. Now we got rate cuts. That's going to help. There was some headlines out earlier today regarding Apollo. Apollo Management made an investment in Intel, multi-billion-dollar investment in Intel. So Intel should be moving higher. About $5 billion deal in Intel. Qualcomm tried to take a friendly takeover deal for Intel as well. So there is obviously some kind of value in the Intel stock that fits into the what I'm talking about in terms of semiconductors have been weaker. Maybe they're going to play a little catch up here. So what we're looking for is 25.51 on Intel. I don't know how high it'll go, so just be careful on those gap ups. We may get this gap filled at 28.90. That's a $7 move. I don't know how much of a move will be baked into Intel. We will see that tomorrow morning. We will see how high Intel goes. Let's say it's about up to $24. It gets about $3, let's just say. If we can get to 25.51, then we could play that gap fill at 28.79. There's definitely a lot more upside potential if Intel proves that it can fill these gaps within time. Take a look at AMD now. Anything with AMD, I got 164.61. If we do get that catch-up trade, let's see if AMD gives it to us because we got a gap to fill here at 174.26. Very similar like we did with Tesla. Tesla was stuck in this channel. We've been playing it up and down. Same thing with AMD. Again, let's see if we can get that break. NVIDIA, of course, the one that matters. Above 120.90, I'm taking a look at the 125 calls. And if we break down, let's see if we break down below 110 on Intel or Nvidia, excuse me. Again, I'm expecting more upside than I do downside here. But if we do break below 110.27 or so, that gets us below the 100-day. We can give us a little bit of room down to 100. We can obviously lower this even more. But again, 110 kind of just opens our eyes and see if we can go ahead and test this upward channel or upward wedge here, or flag if you want, right around 100. So again, just depending on what moves tomorrow. So again, that's kind of really my focus is semiconductors and see if they do move. IWM as well, small caps. We want to break 226.77. If we get there, then we could do the 230 calls if they have volume. And again, all we want to do is break the recent highs. Again, we don't want to get stuck in this pattern here again where we're just going to get chopped. Let's see if we finally get that breakout that we've been wanting on small caps. So that's going to be my catch up trade is going to be the small caps and it's going to be the semiconductors. They're the ones that have been taking the hit uh, within the last 60 days or so. So there's FOMO in play. Obviously, that's something that's going to be could give us a little bit of juice to the upside. Bearish seasonality could have capital on the sidelines, really just looking to see when they can get in. What is the VIX telling us? Let's take a look at it. Well, it was all good just when on August 5th, well, we hit 65 VIX, but now we're at 16 VIX, and it doesn't look like any prospects of bouncing. But that's the thing with volatility index, anything can happen. So what we're looking for is continued downside here to 1154. If we can break 1475, that's the 200 MA. And yes, I know VIX in terms of technical analysis, rather redundant because anything can happen. But with that being said, 1475 would give us the green light that we have a lot more juice higher. And that means 1154 would be the next stop down. Again, once we start getting into the 10s or the 11s, that'll be kind of your signal to buy some insurance on stocks. So what I'm looking at here is that the more bullish we get, let's say we get good data points, the more the VIX is going to come down. That's that FOMO trade catching up, the cash on the sidelines that was waiting to see what kind of Fed policy was going to be implemented. Now we have accommodation. Now we got 50 basis points. We got a little bit of a gap here just to get us back to July 19th. And if we get there, that's going to be the opportunity to take a look at buying some very, very cheap insurance, maybe some cheap puts to at least protect yourself in the October month, which tends to get a very, very wacky. All right, so we went over the economic calendar. We went over the earnings, really just Costco. So that's where we are. Again, I wrote this all down in my notes. So we went over a couple of names. As you know, let's take a look at futures. And if we are pushing higher, and we are. Let's see, getting that push higher now on the NASDAQ. Very nice. So again, all we're looking for is to see if we can break about 57.97. And on NASDAQ, we had a little bit of resistance here short term, 1, 2, 3. Now we're getting that push. The target now is 20,203. That's going to be the short. That's the all-time high on NASDAQ futures. And again, this is going to be the guide, the VIX. You can see that we have this air pocket now down here to 1475. Once we break down below 1475, we got a little more juice down to 1154. That's probably going to be a time where we'll get a little bit of a pullback in the market. But my point being is that we still have a little more to go. There is still some cash on the sidelines in money market. There maybe have some traders that were in the wrong side or some FOMO out there as we're getting rate cuts. You still get that. We had that in March of 2020 where we got some buying in stocks. It took until May to really get going. But again, it takes about 60 days or so, in my opinion, that I have seen how rate cuts go through the system. So you're not late in this rally. We still got a little more to go, and that's good news. So the idea is to take advantage. We got our levels that we're looking for. I'm going to post the watch lists and charts here, or the watches for the week under watches and charts. That's going to be for our paid members. If anyone is interested, make sure to join us. Scrolling below is the website, www.gar.capital. Take a look at our site. Take a look at our plans. We have a deal now on our annual plan that's cheaper than paying month to month if you're willing to stay with us for 12 months. Enjoy the bull run with us here at GAR Capital. 5 for 5 this week in options. Let's keep the momentum and the streak alive, of course. Hopefully, we're getting another double-digit streak. It's been a minute. But again, thank you guys so much for watching and supporting. Make sure to like and subscribe to our YouTube channel. Make sure to subscribe to our podcast as well at GAR Capital. Turn on notifications so you don't miss any futures content. I'll see you guys on Monday. Have a great night, guys. Cheers.